How should an entrepreneur approach the question of valuation? After all, valuation is a very subjective matter. It depends on three things. Number one, who you are and what your past accomplishments are. Who are the investors? Are they family and friends, angel investors, or venture capitalists? And thirdly, what stage is the company at? So, the first question, if you're a first-time entrepreneur, obviously it's very risky investing in you, and therefore you don't get a very big valuation. Whereas, if you're an entrepreneur who has returned millions of dollars to somebody, obviously you'll get a bigger valuation. I've seen first-time entrepreneurs get a valuation as low as $2 million, whereas at the same stage of the company, an experienced entrepreneur getting $500 million pre-money valuation. So I'm not saying I agree with it, but the world always looks at these entrepreneurs and says if you've done it before, you're less risky than if you're doing it for the first time. Investors, if they're families and friends, money, they're mostly interested in making sure that you're successful, and so they're not going to be that serious or that rigorous about the valuations. Angel investors are a little bit more experienced, and obviously they also want to make sure that you're successful, but it's their own money and they can be a little bit more liberal with the valuation as well. However, when you go to the venture capitalist, after all, venture capitalists raise money from somebody else, and they've made promises as to what kind of returns they would provide to their limited partners. And therefore, venture capitalists have a fiduciary obligation to make sure that they're investing in a company so that the risk of return is low and they can manage it. So typically the venture capitalists tend to be focused on making sure that they have a certain percentage of the company, and therefore depending on how much money you raise, they would own a significant piece of your company. And thirdly, the stage of a company. If you're somehow, let's say, bootstrapped a company and you have a product that's just catching wildfire, it's just selling, and the cost of acquisition of the customers is low, then of course everybody wants to invest in your company. And once you have that competitive force, you'll get good valuations. Valuation of a company is very similar to selling a home. When you want to sell a home, if the market is hot, everybody wants your home, then there is a competitive bid and the value of the home is set higher than what you think you want. If the market is low, you don't want to get that money. So valuation is a very subjective matter. So the best way to build a valuation is to build a really great company in which everybody wants you to invest.